Awesome.
So if you ever heard of the term Sagan, yeah.
So she does like your background work?
Yeah, she does all of our videos that we make.
Very cool.
Yeah.
I'm a little jealous. I spend a lot of time
I'll show you some of her work.
Oh, yeah?
So yeah, so we're here on Tuesday.
Yeah.
Near the end of the school year.
Near the end of the school year.
I appreciate you seeing me.
Yeah, thanks for coming in.
And you had asked a little bit about my background.
Mm-hmm.
I used to be a special education teacher, an elementary principal, and I was a school superintendent for 23 years.
Yeah.
So I recently retired from Illinois when I was 55. I'm 59 now. And I, what I started to do when I retired was I felt I wanted to do something to give back to people. And I found throughout my career, people needed help with their personal finances.
Really
That
cool.
was the number one problem that people had in their life when I was working with teachers. They were stressed out all the time about their money.
That's bad. Yeah.
Teachers don't make a great salary, and expenses are high, so they were always stressed. Their health suffered, their relationships suffered with their spouses because they were fighting about money, or they had to take time off work to deal with problems related to money.
Dang.
So I started to do some personal education classes on finance for people.
That's really cool.
Yeah.
So you were like a superintendent of a high school?
It was K through 12
K
school
through
district.
12 school. Oh, sorry.
Yep.
So you started that. When did you start doing that?
I started doing these classes for my teachers when I was a superintendent, probably 15, 16 years ago.
Oh, that's really
and
cool.
we paid them to come to classes after school.
Wow.
So just like you sometimes pay teachers for staff development, we paid them to come to learn about financial education. And how we came up with the money was, in a school district, you have you spend maybe $10,000 per teacher on health insurance. So we took 1/100th of 1% of our health insurance budget, and we used that to help pay the teachers. And then what we found was if we can get one teacher off Xanax, one teacher off ulcer medicine, one teacher off sleeping pills, you more than paid for the program.
Wow.
So it just cost us a few $1,000s a year, but you could save tens of thousands of dollars of health insurance costs.
That's awesome.
So that's a little bit of the background. Then when I retired, I felt I didn't want to just do nothing. I was still relatively young. 55 sounds old, but it's still relatively young, and wanted to feel like I was still involved in helping people throughout the day.
Really cool. Really
So
cool.
this is kind of my mission.
So what drove you? I know you saw these teachers, they were struggling. Was that the biggest thing that made you want to help? Was it just a drive of look at all these individuals struggling, and then you had, I think, maybe a background in it, and you thought you knew about this financial stuff and you thought you could help?
A little bit, John, and it's a little embarrassing, but for me, I had financial trouble growing up.
Yeah.
So my wife and I got married when we were in college. And then we started having our kids when I was 22, and I was a teacher going back to college for my master's degree and doctorate, and we spent a little bit more than we took in every year. So between that and student loans, I had financial troubles in my early 30s and was stressed, and then I fixed it. So it's embarrassing to talk about, but it's one of those things like someone that was an alcoholic,
Yeah.
So to me, if I had a money problem, so then I felt, oh my God, I'm in a position to help all these teachers. I don't want them to go through what I went through. So that was kind of my driving force to say, I had a bad time with money, and all that I was missing was a little education.
Right.
And I want you to not have that problem, teacher.
So you learned the hard way then?
Yeah, I grew up rough. My dad had a 15-year-old mom. So his mom had him when she was in high school, and no father.
Wow.
So then my wife's dad, she was one of 9 children. So we both didn't get any education about money, but we learned how to work. So we learned to be very hard workers.
That's awesome.
and maximize what we had. So I feel like people just need some education. And you can change your family tree. If your family teaches you about money, you teach your children about money, it keeps your family going great.
Yeah. So when you're empowering these teachers, you're really empowering them, and then their kids, and then their kids' kids.
You kind of use that term, changing your family tree. No matter what circumstances you're born into in life, you can change that by just a few basic fundamentals. And I was inspired by you when I met you on Career Day, because you knew those fundamentals. You said if you like investing and and you have time to learn about investing, I can teach you investing. But you had shared with me, and we'll talk about this later in the interview, here's some fundamentals that you can do to build wealth long term.
Right.
Of
course.
So that's just a little bit. And then this Catalyst Academy that I have is, I don't get paid for doing this work. My wife and I donate money to this from our pocket, and then we have other donors that donate and believe in what we're doing. To say, hey, it's worth. And I have some people that donate $5 a month, and other people larger amounts, but just, a little bit of money every month that they say, this is so important to our world that we need to do this.
Really
so we're an official IRS 501c3 nonprofit.
Yeah, I'm supporting you on Amazon Smile.
You're awesome, sir. You're good. So how about you? Can you tell me about what got you excited and interested in investing?
Yeah. So it started, end of freshman year. I had a pretty big transformation. I was kind of a little bit of a loser at the start of high school, and my parents, they just recently got divorced, so I was sort of like out on my own. My dad moved out, and I kind of had to kick it into overdrive. I was like, what am I going to do? I got to step up. And at the time, I was really, really obese, and so freshman year, I decided, the one thing I'm going to do is change that. So I went and started, we had a health class, which was awesome, and they taught us how to count calories, and I was like, what? I never even thought of that. So I started dieting, I started working out every day, and over freshman year I lost 50 pounds and started really getting in shape. I mean, it was a dramatic transformation, and that gave me the self-confidence to go out into the marketplace and start working. So I got my first minimum wage job at Subway, and I saw so many of my peers around me. They were like, well, you're going to work for minimum wage? And I was like, yeah, of course. If you have no experience in the marketplace, you have to go out there and you have to crush it. And it starts to build that work ethic and also the confidence in yourself that you can do it. And I was very, very, very grateful for the people I worked for. They didn't actually enforce child labor laws. So so I was working, I worked over the summer, and then school year started. I was working over the weekends and then 2 or 3 days during the week. And I loved what I was doing, and I was growing a lot of social skills and continually developing myself. And that really gave me just a huge boost in confidence and a roar in myself to really start researching stocks once sophomore year started. And I started looking up, what is personal finance and investing? How do stocks work? Because at the time, I'd finally, started having income, and it was like, whoa, what? And it was such a big change from how I was before. But at the same time, I was like, okay, well, now what do we do with this? I wasn't a big spender to go out and just buy, useless or just, random consumer goods. I thought, how can I, grow this? So I started looking, and, I'd heard about the stock market before. And my dad, he works in investment banking. He does loans, corporate municipal bonds. So he was like, hey, you should check out the stock market. And so I was like, oh, okay, good idea. And so I look up what is stocks, and something really clicked, and it was just crazy because it just skyrocketed from there and kept snowballing. I just kept learning more and more about personal finance and investing and how these guys are day trading and all these cool strategies they're using. And for 3 or 4 months, I just kept researching more and more about the market. And it was tough because there's a pretty high educational barrier to entry into finance, to the extent that it took a lot of research. Essentially every single day I'd go to school, then I would come home and I would research stocks. And that was pretty much all I did for 4 months, because there's just a lot to get over at the beginning. And I had nowhere to start. I had no clue what to do. And, there were some books at the time I saw, like The Intelligent Investor and, some other stuff by Warren Buffett, but those were not very applicable. It was I could read that and I understood some of the principles in it, but I didn't really get what's a stock? How do I get into the investment market? And how do I really build real savings and retirements? How do I grow my wealth? So that's what drove me to tons and tons of online websites, online forums, and just learning about it. So after a couple months of that, it was, I think April of sophomore year, and I decided I was going to quit my job And I started a paper account a couple months before, and I started making some swing trades, some long-term investments, just trying to simulate where I would be in the marketplace. And I was doing pretty well. I was also losing some money. So you win, you lose, and I was learning. And I decided I was going to quit my job and trade stocks full time. And my mom was not very happy about that. But I knew that there was something in it, and I just really liked what I was doing. So I stopped working at Subway and I started swing trading stocks after school until school ended. We were doing long-term investments. And that's when my education skyrocketed, because with fundamental real market experience, that's when I really started to learn about how to trade and how to trade really well. So then summer
versus
started.
when you're in doing it.
Yeah.
The learning by doing.
Learning
you can
by
learn
doing.
by reading a book, but then ultimately when you were learning by doing, getting burned sometimes.
Of course.
Making mistakes or having successes.
Market tuition comes, a lot cheaper than a finance degree. And I think at the time there weren't a lot of very good, books or courses on the topic, so there wasn't a great footing to start with. I would have loved to start with a better footing. There just wasn't, I couldn't find anything out there. So yeah, I just learned by doing. And, you get burned for sure. Some of my positions, I remember, NVIDIA Corporation, they had a huge run up in the last 2-3 years. They went from like $100 to 350, I think. I don't know. But that was one of my first positions. I was big into computers. I love computers. And I decided, hey, I'm going to buy, AMD, NVIDIA stock. And I was learning about some technical setups just off a bunch of websites online. And I learned about this one thing called a downward wedge. And a downward wedge is, it's a technical pattern. I talk about it in the book. And it indicates, an upward price movement. But I didn't know that at the time. I was reading all these weird websites, and one of them said, hey, downward wedge is bad. It's going to go down. So NVIDIA, they were in this downward wedge for 3 or 4 months, and they were about to report earnings. And a lot of the people, I was looking up, what do people think about NVIDIA earnings? And this was a little bit before I really knew about the cryptocurrency markets and how everyone was buying their parts for that. So I was big into the consumer space of it, but not as much into the industrial compute space. So I saw these people saying it was really bad. I saw this pattern that means good, but some of the bad information I read online, which was unfortunate, but I learned from it, said it was going to go down based off the setup. And I remember the day. It was the day before earnings. They reported earnings after the bell. And I go to school, and my mom drops me off. I get out. I start walking to the front door, and then I realize, oh my gosh, I forgot my phone.
Oh no.
So I run back to the car, and
you can close your eyes right now and see that, can't you? Right now, you can actually picture that as a movie.
Oh my gosh! It was just this surreal moment where I was like, should I go with what has been passed to me by the world today and leave my phone in the car? Should I go back? And I went back, and I grabbed my phone. I went to school, and at the time I was a minor. I hadn't read any things about how to open UGMA, UTMA minor accounts, so I didn't know how to open my own accounts, which is something I cover in the book because I've now learned that, but I just had no clue at the time. So all my investments were under my parents' name, and at the time I was doing most of it through my dad. So I had NVIDIA in my dad's account, and so I go to school and I keep reading these articles on my phone about how NVIDIA is going to do terrible and everyone's wrong, and I didn't really have the experience. I hadn't really learned about okay, cool, we're good. I hadn't learned about how news and principles are usually wrong, and how the mass media is usually wrong, and usually you can go with the opposite of the trend, and you're gonna have. There were so many principles about news that I hadn't learned yet, and so here was me learning them. Yes. So I get to lunch, and I decide, you know what, I gotta sell NVIDIA. I bought it at $101. It was at $104, and I was like, they're gonna crash after they report earnings. They're just gonna destroy. So I call my dad and I say, hey, it was like $1,000 position. I said, hey, Dad, sell NVIDIA, and he's like, are you sure? And I'm like, yeah. And then he sells it. I make a 3% gain. And I'm like, wow, annually that's a 9% gain on a single stock. And it was actually a craze. It was probably 25% of my portfolio. I hadn't learned about diversification or hey, maybe you don't make your whole portfolio based on one stock.
Right.
There was just no one to teach that. And so I say, hey, let's sell this stock. And so he sells it. at market. Didn't know about limit orders. Didn't know how to save on the spread. Whatever. So I get home that day, and then 4:30 in the afternoon, I'm on my computer, NVIDIA earnings report, live streaming, and they crushed it. And within 4 minutes, the stock was up 20%.
Oh my gosh!
And I think by the end of pre-market, by when I went to bed, it was at like $127, and I was bawling. I mean, I was like, oh my gosh, what have I done wrong here? And that was that was probably the day I got hooked on stocks.
Isn't it? Yeah, by something negative.
Exactly.
I think you learn lessons from some of your worst experiences. I bet people learn lessons.
Yeah.
What a great story.
Oh man. So I decided I was going to go head down. I was learning about all these technical setups. It's like, why did I get this wrong? Let's look at the charts. The charts really spoke to me. I understood the fundamentals, and I knew that the fundamentals were a baseline for everything I do, and there still are. They're a tremendous use for, especially for swing trades, long-term trades. They're the absolute basics of a trade. But for short-term trading, those stock charts are really what clicked with me. So I started going hard and hard. Then school ends, and something phenomenal happens. I can finally start to trade 9 to noon because I'm not in class all day. Mm-hmm. So I open a Fidelity account with my mom, and she's like, okay, Jack, you can do it. Mm-hmm. I give her a bunch of money because I never really spent any money. I had from Subway, so I was accumulating all that, and I had that capital base to start with. I was still, since it was under my mom's account, I was actually very, very lucky. I was able to bypass the PDT rule, so I could trade as much.
I don't know what the BD. What's that?
So that's a rule, and it's a really bogus rule. I don't know, but the SEC, Congress passed it, and essentially, if your account's under $25,000, you cannot make more than 3 pattern day trades during a 5-day period, which is a week. So essentially, you can't open a trade and close a day trade, more than 3 times in a week.
Is the feeling we're doing this to protect you from yourself?
That's what it was meant to be.
But ultimately, you would view that as a restricting my ability to earn money.
Exactly. Yeah.
Right.
Yeah. So for a lot of new investors, it's really bad because they actually are out there learning about this stuff, and they're consuming material, and they want to learn through experience.
Right. I'm with you.
And they can do paper trading, and that's awesome. But to get those real emotional responses, you got to have some skin in the game. And if I just had like a fake paper position with NVIDIA when it did that whole, it wouldn't faze me.
No. I agree 100%.
It really sucks for a lot of people. If your account's under 25 grand, you're kind of screwed at the moment with current legislation. It's only 3 trades a week. So when I was day trading, right? So back to summer trading. So I was very lucky. My mom had an account over 25 grand, and she just had me as a little sub account in her account. So I was able to start day trading, and I was making like 7 trades a day, less. Right. So that was normal day trading. I had about 7 trades a day. So over a week, it was just exponentially more than that PDT rule. So that's a big limit on a lot of new accounts, and it really sucks. But anyway, so start trading in the summer, and I just had these massive profits coming in. I was loving it, not just for the money, but like I really had a great time doing it. And the trading every day, I started to get into the 9 to noon workday, and I was doing these short-term positions, and they were crushing it. I was having a great time working on the setups, working on the patterns, going through the screeners, and I just loved it. And then after that, I could transition to my long-term stock, and so I was strengthening, my short-term technical setup trading. Mm-hmm. I was also strengthening my fundamental long-term trading, which was, really important.
Which is a huge
for investing for like anybody, if they want, if they have a retirement account, they want to build a retirement, like you just got to get a handle on those fundamentals. So I do that for summer. And then school comes along, and I can't really trade 9 to noon during second period. A little bit of a predicament. So like I said, I had built my first computer the year prior, so my background was real. I had a solid background in computers, and I think it was around that time I started building computers for friends. And I was researching some computer parts, after hours, trading's done for the day. And I come across, I was in a trading group, and someone said, hey, you guys should check out Ethereum. And I was like, what's Ethereum? And this was summer 2017. And so I look up Ethereum, and then I start learning about it. I'm like, whoa, what? And there's like this whole new world that opened, this whole new financial market, and that was cryptocurrencies. Right. And since cryptocurrencies are currencies, they're traded on 24-hour exchanges. So that opened this whole new window for me. I'm like, whoa, what? So last month of summer, I started doing all the research I can on cryptocurrencies. And it was like such a new space at the time. Like there was like basically nothing out there.
There's no information, right?
Yeah.
Or limited information.
Yeah, very. It was all, like, what is blockchain and how is it? If like, I was like, dude, what? I just want to make money trading cryptocurrency.
Right.
At the time, right? It's grown a lot since then, especially with Monerads. But anyway, so I started researching, and I learned about mining computers. And mining computers, they run the blockchain hashing algorithm, and you just have a computer that sits there, and it just makes money every day by running a cryptocurrency script, and you just accumulate cryptocurrencies. So I was like, whoa, that's pretty cool, like passive income, like sweet.
Passive income, right?
Yeah, a good way to diversify my portfolio holdings. In a new speculative market. It was really interesting. So I decided, hey, that's cool. And then I also learned about these thousands and thousands of cryptocurrencies. Besides, the big ones like Bitcoin, Ethereum. The big ones. There's a bunch of called altcoins, and I started thinking, oh wow, these are like stocks, right? And they were listed online like stocks, and they had bar charts and candlesticks just like stocks.
Candlestick, really? They have all that data. Wow.
Yeah, and all the indicators I've been using on Yahoo Finance, I've been using on Fidelity Active Trader Pro, I've been using on TD Thinkorswim. I saw those on these cryptocurrency exchanges. So I started watching, unlike the market where it's like there's an opening bell and then there's a bunch of volatility. And that's just the most fun, the biggest hype. Oh my God, it's so good. It's so great. Unlike that, with cryptocurrency, it's 24 hours. And so I started looking at it as a swing trading perspective. Like, how can I swing trade this? And that would work with my schedule with school. And it would also work, a little bit more relaxed, hands off. I'd have like 4-day positions. So I started watching these guys, and I started to see all of the same technical setups and patterns I was seeing in the stock market. And it was really interesting because at the time, these cryptocurrencies were so volatile. And, with stocks, you would see these setups on swing trades, and they would be like $50 stocks, and they'd go to like $60, $70, $80 in a couple weeks if you were lucky, you had a good position. With these cryptocurrencies, I would see a technical setup, and I'd see it across a whole broad range of these altcoins, which are smaller coins. So just like the smaller stocks I was trading, day trading, I'd see these smaller cryptocurrencies. And these guys would mimic these stock setups perfectly, and they would launch right out of the setup, whatever setup it was or whatever indicator crossover it was, and instead of going from 50 to $80, they'd go from like 50 to 200, 300. I mean, it was ridiculous.
Multiple, yeah.
And I was like, what? And I'm using big numbers here, but a lot of the stocks, or a lot of the cryptocurrencies, they were like fractions of a penny, and then they would go to like a penny. Or some of them were like 50 cents, and they'd go to like $10. And it was bizarre. It was like, the way I remember it and the way I still talk about it is, it was like the entire birth of a financial market in like a year. It was almost like every single stock in existence like just came to be, and just It was a crazy trailblazing moment in that industry of cryptocurrencies, and there was not a lot of coverage on it in the market. I stumbled upon it by accident, and I got super hard into that. I mean, I was researching it hard when school started.
What was your success? Was it because you saw the pattern of the stock market and you knew how that worked?
That was definitely the biggest factor, was that technical background and those technical indicators and technical setups. Those chart patterns were like the driving factor behind price movement, because with most of these cryptocurrencies, unlike stocks that like make money and have companies behind them, these guys were like, they were nothing, most of them. And so the only way to make money with them, or at least most of them, they were usually not long-term investments. So you weren't looking at fundamentals. There were hardly ever any fundamentals. I think I found one cryptocurrency that paid a dividend, and it was groundbreaking. It was cool, but like none of these were like companies. So everything was a short-term technical analysis trade. And so when school started, I decided to invest a couple grand, like $4,000, into a cryptocurrency mining rig, and that was just a machine I built, and it just mined cryptocurrencies all day. And then I put money into a trading account, and trading that trading account of cryptocurrencies was really fueled my passion for trading. I mean, I loved it. I was making like 90% a month swing trading, and it was just killer. It was this brand new marketplace of just rapid, volatile movement, just like I was trading in the stock market. And by mastering the education in the past, I was now able to apply it, strengthen my skills, and absolutely crush it with the knowledge because I put the work in before, and now I knew how to use it. And it was being used in a market that was very, very prone and ready to be applied to. And those cryptocurrency markets, they crushed it for months and months. And it wasn't all success. It was definitely challenge. There were some big failures, and I made a lot of mistakes in my psychology, and I made a lot of mistakes. I wasn't very developed. I had developed socially. I had developed my stock trading skills, my investing principles. But one thing I hadn't really mastered yet was my mindset, and that was a really big drawdown. I lost about $100,000 in the 2017 cryptocurrency crash. And it was all because of mindset and principles.
Can you talk more about the mindset issue?
Yeah.
And do you have that same pattern with stocks too, where you have to watch yourself or check yourself, knowing this is my weakness or this is my...
Yeah.
Okay.
Yeah.
Discuss that. I'd like to hear.
So with stocks, I think it's a little bit different. You can set a stop loss, and you know exactly where your risks are, and you can set a risk-reward ratio. And I pretty much would always set a stop loss, especially when you're starting off. That's a super, super big thing. If you're trading individual stocks or you're learning about how to trade with technical analysis or whatever, is giving yourself a maximum loss and then sticking with it. And it's tough. When I was day
no matter what.
Yeah. Oh man. And I've been on the hard end. I remember day trading in the summer, and I set a stop loss. I was doing this day trade stock, and they popped out in the morning, and they were just, I think they were like $1, and they went to like $1.60, and they were skyrocketing in the morning. Everyone was super excited, and I'm like, I'm gonna get in this for continuation, right? So it has a micro pullback on the 5-minute chart, and I'm like, oh, this is it. I'm gonna get in. I get in at like 132, and I set a stop loss. I'm like, the most I want to lose on this trade is I think it was 10 cents. So I say, if it gets to 122, I'm selling. I'm out. And so I set the stop, and that was based not on like just guessing, but like I looked at the historical. One thing I do, especially with day trading, is I'll look at the historical support resistance levels. So, and I break this down in a lot of my content. But like when I'm getting into a position, the first thing I want to see are what are the historical psychological price levels, especially on a day trade stock, and then those price levels will be big contention points for the day coming up. So if it's like a stock that's been trending, and you can see a noticeable horizontal trend line like 6 months ago, maybe it was the base of a head and shoulders setup, maybe it was just a trend line, whatever it is, that's going to persist. That the psychological point will persist for years and years and years. So I would set those levels, and I found that there was a big support line, which could then also be a resistance line at 124, or 125. Right. So I set it a penny below that, and I said if it hits here, historically, it's had a big price change here. So I was like, if it hits here, it'll probably dump, right? So I didn't want to get stuck on the downtrend, so I set a stop loss. And then the thing ticks down for 2 or 3 minutes. This was right after market open, and then like there was a huge sell order. I don't know what happened, but it just bongs, and it crashes right down into my stop loss, and I sell out. It was like a 10-cent loss on the trade. But then the next thing that happens, next minute candle opens, and right after it just had that huge drop, the thing just skyrockets. It went to like 220 in the span of 4 minutes. And markets move fast. They would move really, really fast in the morning. These stocks would crush it. And I was just out of it. But I say that, and it's like you gotta set that at the beginning, because there's, of course, the flip side of that trade is it goes to $1, and right. You can lose so much in that you just have to have at the beginning. I wasn't skilled enough to say, hey, can I give this another 5 seconds to reverse? I just didn't have the experience or the education.
Or what happens if I'm distracted with another project at the time? Or do you feel when you focus on, I'm there in that game for that one stock and I'm watching it like a hawk? Are you watching multiple stocks at one time?
Yeah. I definitely multiple stocks, especially early in the morning when I'm finding a trade. I'll have like 10 charts up easily, yeah. And every chart has a buy button, every chart has a sell button. And I'll definitely bounce attention. The most I'll do is 3 positions open at the same time.
That was my kind of point. 3 at a time.
Yeah.
Is your max that you can.
And that was not at the beginning. The beginning it was 1 at a time. And And then I got good at one. I was, I'm like, okay, I'm doing a really good job. I'll go up to 2. And then now I'm at 3. And the point is you just have to understand what you're doing. And because you find one really good stock and you can crush it. But at the same time, sometimes they move slowly. And so I'll balance out whatever my allocated day trading fund is between 3 positions. And then if one moves kind of slowly, or maybe, with that one example, that was like a 1-minute chart, and it was really, really moving quickly. But with some stocks, you'll have a slower movement. Maybe it moves 30% over the course of 5, 8, 10 minutes. So you have the option to take multiple positions because you can balance them.
Right, because it's
a little bit slower.
Right. When you talked about mastering your mindset, what is your trend that, you obviously must have lots of discipline. You talked early on about, I did weight loss. So you must have an incredible level of discipline to be able to do all of this.
Very important.
But what is the part for you that you know yourself that I get too greedy, or I get too fearful, or what's the part that you have that you have to put some measures in place to make sure you don't make a mistake?
Yeah, I've been working on this for a long time.
Or I'm too impulsive, or I'm not impulsive enough. I need to trust some instincts. Can you discuss that?
Yeah. So with instincts, a big part of it is balancing your gut and balancing your head, and just making the right decision, and trusting how it comes out, and saying, hey, I know I'll probably do well. If I have a 3-to-1 risk-reward ratio, I'll win this trade 1 out of 3 times. I'll break even. That's okay. So just having the background helps strengthen your gut. So like if your head is strong, your gut becomes strong, and then you can trust yourself, which is important. And it's especially important for like when to get out of positions, when they're moving quickly. Like, what do you think the top is, or if you want to sell half, something like that. And with discipline, it's the same thing. Sophomore year I was weightlifting every single day.
Yeah.
And fitness has been a surreal part of maintaining that discipline. Junior year it was cross country. This year cross country, track, and having that physical fitness is definitely the number one step of mastering yourself. Because if I'm going to control my head and I'm going to control what positions I'm in the market, like I've got to control my body, and I've got to be the master of myself. Another thing that really, really helps with discipline is meditation, twice a day, every day.
Wonderful.
Yeah. It's just surreal.
Slow. What's interesting when you talked about that body-mind connection, there's a lot of research that talks about when people get control of their money, they lose weight.
Yeah.
Isn't that an interesting concept? So you kind of shared the opposite of that, but for people at the basic level, you're at a much higher level. But a lot of the research we see is when you get control of your money, the rest of your life gets better. Your health gets better. Your relationships get better. So that's another driving force between what I try to do, which is get some discipline with your money, and you'll see the ripples affect other parts of your life.
Really cool. And so you instill discipline with like a budget?
Yeah, I mean, to me, that's one of the big things I'd like to talk to you also over time, too, to kind of get your advice. It seems like you're an interesting person in that your level of knowledge is so deep in investing. But when we talked on Career Day, I got the sense you had such a wonderful common sense approach for regular people.
Yeah.
Obviously you're a regular person, but this is a super sophisticated level you're at. But for the masses, I feel like you have a message for the masses, and I tend to work with the masses.
That's awesome. Yeah, no, social connection.
So tell me what you think for the masses, what they need to know. The guy or the woman that doesn't have the time, the energy, the intellect to do what you're doing here.
Yeah.
Probably focusing on your longer term.
Of course.
What would you tell them?
The biggest thing is goals for creating real savings and retirements, and just take a couple minutes and think, okay, how do I want my style of living to be when I, if you retire and you're in a job and you want to eventually retire, or if you have a savings goal, just envisioning and then writing it down. You got to write down your goals for them to become real. The first step is envisioning it mentally, and when you mentally envision it, you can go on to the second step, and then the second step is physical acquisition of your mental envision. So that first step is the most important part, because it's going to be the driving force that gets you to physical possession of that end goal. So if you're looking, at the average guy, the most important thing with personal finance and investing is, first of all, envisioning your goals, and then second of all, saying, I deserve this, I can achieve this. Looking at your history and justifying to yourself why you deserve. Because if you don't believe that you deserve it, you'll do what I do. You'll have like $100 grand and you'll just whiff it away because you don't believe that you have earned it. So you have to justify to yourself why you deserve it. And then you can get on to planning on how you're going to get there. And for a lot of people, it's super basic. You follow Ray Dalio's all-weather fund. A lot of people do that, and it's the most simple thing in the world. A lot of people just invest in the S&P, most simple thing they can do. With long-term stock indices, it's ridiculously easy for the average American. And I think, a lot of people get tripped up. They're like, wait, that's it? And so that's why I recommend that most people take maybe a month of their life and they say, this is the month that I am going to change my personal finances. This is the month where I'm going to change my investing forever. And
this is my month to change my destiny.
It's like a 30-day challenge to change your destiny, exactly. And go out. I don't want to sound like a promoter.
No, do it.
But it's 9 to noon, The Secret Workday of Uber Wealthy Americans. That book, I spent 7 months writing that book. And the point of it is to take anybody from 0 to 100 in personal finance and investing. And you read that book over a course of 30 days or however, you can fit it into your life and make it happen. That's going to give you the fundamentals. It's going to show you the taxes, how to take care of everything so you never have to worry about that April 15th deadline again. It's going to show you the best ways to save money by investing in tax beneficial accounts, and specifically saving for savings goals like college or building a home, retirements. There are very, very applicable and simple ways to do that a lot of people just don't know about. Some people, maybe they have an IRA, maybe they have a 401k, but they don't understand maybe how to maximize the value they're getting out of that. And that's exactly what I go into in the first couple of chapters of the book. And then after that, we get into the investing mindset. And even if you're not investing in individual stocks, even if you're just investing in index funds or a giant basket of stocks, understanding what makes individual stocks move, I feel, is the absolute core to building a successful long-term portfolio. Because if you don't understand what you're investing in, then
you have to know.
You got, because if the market has a huge crash, like 2008 happens again, and everything goes down 50%. If you don't believe wholeheartedly in your portfolio and what you're doing, people sold at the bottom, and they were like, stocks are terrible. And then they just bounces right off those bottoms because the stock market historically, 9% a year.
Right.
Every year. And
the average person sells at the absolute worst time and buys at the absolute worst time.
Oh my God, it's terrible. It's the human error in index investing. And I think the biggest reason behind that is they don't understand and fully believe in what they're investing in. So by understanding the fundamentals that I go through in the book on how to break down...
your book does a great job on that.
I appreciate it. How to break down individual companies. So if you're looking to invest in individual companies, these are the things to know. Here is how you can make the most possible money by identifying the best humanly possible stock picks for your portfolio. Even if you're not going to go and spend the hour a week that it takes to screen through some stocks and do a little bit of research. And that's something, a lot of people think it takes a whole lot of time. You can spend an hour or two on Saturday researching long-term positions. I remember when I was actually writing the book, in the morning I wake up at 4 and I would write for 2 hours, and then I would go to school, and then I'd have cross country, and then I would come home and I'd write for 2-3 more hours if I was lucky, and go to bed at 8. And on the weekends, I would do 15 hours a day writing, and then the last hour usually with family. And I had zero time to research long-term positions. The only way I did it was in between class. We have 6
6-minute
class
break.
changes.
Yeah.
So 5 minutes each. That's half an hour. 45 minutes if you stretch it. And all I would do is research stocks in between classes on my phone. Like literally on the Yahoo Finance app. You just download the Yahoo Finance app. And because like I had taken the time to understand the concepts and invest in my education, and understand the core investing principles that I've, written down and put to paper in 9 to noon, I was able to take that time and find positions every single week. I would take 2 or 3 stocks. I'd put them in a portfolio, and that portfolio has been crushing the average market return. And all that is just a couple, maybe like an hour a week of intermittent stock looking. And like I might sound like a crazy guy, but I mean I've been doing this for 2 or 3 years. Like people have been doing this for decades, and and everything I have is in that book. And if you can really like master those tools in 9 to noon, like you can be right here.
You can be very wealthy.
Yeah.
And very happy, or get exactly what you envision.
Exactly.
What you want your life to be like, and then make it happen.
Make it happen.
Yeah, what a wonderful concept about the I deserve, and I can get this, and I can do this, knowing it's possible to get. Some people are hopeless sometimes, and they don't think I can get it, or they don't. You hit on a good thing, though. You have to know that you can deserve this.
Yeah.
How about people finding the money to invest? When I was with you on Career Day, you had talked about shock that your friends are wasting money on so many frivolous expenditures.
Oh man.
It drives you crazy.
I mean, I walk through the hallway and I hear girls saying they spent $300 on clothes this weekend from their job, and I'm like, what?
If you would have given me $300, I would have make you thousands of dollars. I'll hand you when you graduate.
Yeah, and the biggest thing...
That has to be very hard to hear.
Yeah, well, it sucks because I didn't really think like that until I was at Subway and I was researching the stock market, and I found one tool that completely shifted my mindset, and that was a compound interest calculator.
Yes.
I found it on Google, and I put in the average stock market return, and I decided, hey, I've got 50 years till retirement, and then I put like $500, $1,000, and I saw that how insanely much that could grow, like 50 grand from that little tiny seed investment. When you retire, it's like everything you buy right now has such a larger future cash value that it's like you could buy a pair of $200 shoes, or you can invest it in the market, literally never touch it, and with average historic returns, in like 20, 30 years, you could buy like 10 pairs of shoes, or the exact same pair of shoes. And kids just don't realize, or a lot of people just don't realize, you can like literally multiply your money so much over time. And just by living and saving a little bit out of your budget at the beginning, you can have so much more in the long term.
I teach a class one Saturday a month through our church in Charlotte. There's like 60 couples that come, and I have a portion of it. Part of the marriage preparation class is how to communicate with your spouse, how to make plans, but my part is money. And part of that half-hour session is just reflect before you make a purchase. And I always use an example. Do you and your spouse, or you and your girlfriend, want to go out for drinks and an appetizer on Friday night? And are you going to spend that $50 to go buy some beer or if you think about that, let's just take that $50 and put it in our investment fund, and that will be $400. So your choice you're making on Friday night is not whether we're going to spend $50, is do I want to give up $400?
Exactly.
Or whatever that number might be with their age and the compound interest calculator.
Of course.
And then people might say, I'm going to spend my $50, but at least ask yourself that question. Do you want to spend that $150 on a pair of shoes, or invest that money and watch what that will be down the road?
Yeah.
And I don't think people do that. They're too short-term thinking.
Yeah. Yeah, a big thing is like looking at second-order consequences of...
Tell me more about that. I never heard that phrase before.
Yeah, so like a first-order consequence would be, I go to the store and I see this really sweet thing I want to buy. This awesome little race car. It's an RV race car, and I can buy it right there, $300, and it's mine. I can go home, play with it, have the most fun in the whole world for the next week. And that would be a first-order consequence. It's immediate. A second-order consequence would be, I'm going to believe in my higher self, and I'm going to take what I've learned in this guy John Wooten's 9 to Noon book, and I'm going to apply it. And instead of buying this $300 car, I'm going to go put it in an index fund, or put it in a trading fund, or put it in whatever investment, and I'm not going to immediately see a return on that. You know, if it's in an index fund, maybe I'll get $300, 8% return on that is $24 in a year.
Right.
So that second order consequence is I'm going to have to wait a long time to see a great result from this investment in myself. I'm going to have to, it's going to be a very long time. But that second order consequence of turning that $300 into, depending on your age and market performance, $3,000, $30,000, 40, 50. That's a car.
Yeah.
That's a real car.
Yeah, that's a good example. I like that.
I mean,
a toy car versus a.
And you have to learn, and then once you learn, you just start implementing, and those second order consequences, they're harder to come by, but they're so exponentially more valuable than.
And again, you always put that little phrase, based on market, historical returns for 100 years, but it's so clearly going to happen.
Yeah. I mean, it's
just deferring gratification. But a lot of people feel so hopeless, and I think that's the big thing. We have to figure out how to get people hopeful.
I think.
When I talked to you last time, you had shared an anecdote. You were skiing, I believe, out in Colorado, and you spoke to an older woman that was talking about her Social Security, and
oh man,
that scared the daylights out of you, didn't it? The thought of living on Social Security, like people do that. A large percentage of Americans do that.
That was not last ski trip, but the ski trip before, and I was still writing the book at the time, and I'm sitting in the lobby. It's like I would get up at 4. I get up at 4 to write the book. I mean, that's just how it works. And my parents, or my dad and my brother, they were just sleeping in, and it was like 5 in the morning, and this lady comes up, and she just looks so like she came off the street, and she was so it was sad to see. It was a terrible sight. And she comes and she sits down at the computer in the lobby, and she says, "Hey, can you help me with this?" And for the next like 2-3 hours, I sit by her side, and she's writing like a little report about how Social Security versus welfare, and how the amount of income she's getting isn't enough to support her life, and how over her whole career she's had to support her brother, and how she's had to support her family and give all her money to these people. And she was in real estate. She sold real estate, and she was crushing it in her day job. And then she had these financial obligations to her family, and at the same time she was spending every penny she made. And she was there that morning as a babysitter, as a nanny for someone. And her kids had gone off to college, and she was all by herself just trying to make ends meet. And it was terrible. And she was in real estate, like that's a way to invest. And so after she finishes her report, she prints it out. I ask her, like, do you have any assets? And she looked dumbfounded. She said, what? And it was crazy, because not one moment over her 50-year career as a real estate investor had she thought to sit down and spend 30 days to read a book on personal finance and investing and start investing. And because of that, she was broke. She had nothing. And she was living off of welfare. It was terrible. She was living off of a stipend from the government because she just didn't have any investments that could compound and grow over time. And, like, that's the worst possible position to be in. And that's why, like, no matter where you are, like, you start with $1 a day. Like, anything you can start with is going to have such a profound impact, and it's such a huge difference from, like, at least having this portfolio of stocks because you invested in your education, now you know how to do it and you can do it, versus having nothing. It's terrible to see that. And then once you start to do it, I think that's the biggest hurdle to jump over, is buying your first stock. Because once you start to buy assets, you start to realize, whoa, these are things that are like paying me, and I didn't even do anything for them. And that investing mindset is where 95% of the wealth, the top 1% controls all the wealth because they have all the assets.
Absolutely, well said. Yeah, and that motivation. I love with your book and your story, talking about doing. And I've told you, some people I've worked with had their money sitting in a treasury account.
Oh my God.
And they started doing some investing, and then practically, I love dividends. So, I mean, they started out with, a Vanguard dividend appreciation fund, an index fund. Then over time, did research and realized, there's 4 different individual stock accounts, did research, and then started buying those high dividend paying accounts. Mm-hmm. Now again, that's very simplistic, but that's a little bit what you're saying to do. That's the baby step to go on to what you talk about in 9 to noon. No, you're a good man. I really enjoy getting to talk to you.
Yeah, you too, Mike. It's cool. Like, dividends are awesome because, like, people can see their money and it, like, sends them a check every month just because they put their money away somewhere where it was actually invested. And that's a great little motivator to keep doing it. And if you use a compound interest calculator and you put in an annual addition amount, you stick to that annual addition, you can expect to see that long-term growth.
I've met with a staff member in the Lake Norman system recently and talked about this summer going through, here's your North Carolina teacher pension 25 years from now when you retire. Here's if you keep your pace with your 401k, and then we're going to get out that calculator to show if you toggle the rate of return, but also how much you're putting in a month. Here's what you'll have, and then also with your individual portfolio. But I think manipulating that calculator with a staff member, having them see what could occur just with a $100, $50 a month increase in your 401k, what that will have on long-term needs for yourself is amazing. Yeah, these calculators are fantastic, aren't they?
They're amazing.
I think what you would say, though, to me, Mike, they're motivating, but people still have to get into the doing it on the marketplace too.
Yeah, I think it starts at step 1 with envision, and those calculators help people figure out what goals are realistic and what they can expect and what they can do, and then they can adjust those percentages. If you apply some of those things in 9 to noon, you make a couple trades a month, you can up your percent returns and really start to crush it. And so that envisioning step is all based on that calculator, and then you get into the mental stuff and you read the book, and the book has a lot of that good mental golden nuggets in there. A couple of secrets I've uncovered over the years, and once you have that, then you've got the education, you've got the goal, you've got the commitment to yourself, you have the perseverance. Go and do it.
Well done. I'm very proud of what you're doing. It's exciting.
Yeah.
I had a couple things I was going to show you on the computer offline.
Sounds like a plan.
Beautiful. Thanks so much, John. Appreciate your work.
Awesome. Thanks, Mike.
Yep.